Hi guys, welcome back to another one of our overnight session reviews. And let's jump in. Starting with your daily chart. Nothing has changed. We're still looking for, or we were still looking for this FEG being traded to. Looking at this as the order block. So I'm eyeing that low again. So for me, the draw on NAS is here. Pretty deep pullback. But let me get into what I was looking at right there. So daily dealing range is here to here. Put that magnet on. Since we've already retraced and left, I was not looking for any other retracements back inside here. I don't think it's necessary if we're going down here. My main draw to the upside today was this. Why? Usually, from studies, if you have a swing low where the bulk of the delivery around the daily swing low is wicks and not bodies, retracements tend to go back to at least the bodies. So today I had that body pegged as where I wanted to see price rate up to. Nonetheless, H1 was pretty straightforward. We're still looking for lower prices. So none of this madness was irrelevant or was relevant for me today. The main focus was what I saw on the daily chart, not daily, M5. So now that we take everything off and we go strictly into the M5, I came into the day, me and my team, bandits, looking at price trading higher. Order flow is bearish, so you're looking for a run above overnight session high to create your short entry. We had two levels marked off. One was what I was looking for, and then another one was a curious level brought to us by Daniel. Shout out to Daniel. Yeah, somebody's going to kill me for this. So shift, and there we go. The world is a better place now. Back to M5. So looking at those two levels, now this looks weird. Oh yeah, never mind. So these are the two levels we're watching on M5 earlier today for potential shorts. Overnight session, we opened here. We're looking at two things. Number one is the fact that you take a look at overnight session low. See the swing low right here? All wicks, not a lot of body distribution low. So as the new hour starts and price starts to trade, you're watching if there's willingness to get below here. If there's willingness to get below there, then you can start framing your order block logic or OB model logic. If it fails to close like we expected, then you start looking for rejection block logic. Same thing was happening here. If you look at this high and this low as both pools of liquidity, above and below overnight session, then there were multiple attempts to get below the liquidity pool. Likewise here, all of the attempts were wicks and no bodies. That is suspicious for me. So nonetheless, we came in here wanting to be bullish. This was the level that we're watching. It's an intuitive level because it's the low of an up candle that preceded a big down move. So logically, that should be okay. But with this being higher, I had this marked as where I wanted to see price trade to. So let's look at the delivery after overnight session. Now, let's say you were bullish, or let's say you were bearish, doesn't matter. If you're bearish here and you're watching overnight session high, you'd be waiting for minimum criteria, an up candle to expand above here and close, then it's low taken and life is good. Start at 8 o'clock and move through. I'll open this a little bit. So while it's easy to see this in hindsight, in real time, you would have this candle closing at equities open, 9:30 New York time, not closing above here. So automatically, even though this is a big up candle, the fact that it's not closing above here says you can't use this as an order block. So you have to allow for more price action to form. The next thing price does is close above here with a down candle. So down candle bodies are above here. That is automatically suggesting that, okay, cool. We have a particular price level that you're expecting bearishness. And I'm going to clone this line and put it here. We have a particular level that you're expecting bearishness to come in because the order flow is bearish. Price is doing this and putting down candles above it. How do I interpret that in real time? If this wick is not there, I'm looking for a change in the theta delivery, which means price trading through the high of the down candle that would be here. Then I'm interested in going long. This wick, however, is pretty huge, right? So in no way I'm going to sit here and wait for that high to get taken and buy a retracement here at this order block because I'm not crazy. So in real time, we were watching the closing price, well, lies the open price of this candle. And we're using that to frame where the order block should be. Let's put it on the bodies for simplicity. We're framing where the order block is likely to be. When this candle closes right here, we're interested in longs. This presented the first long opportunity, but the risk is pretty huge. Why is the risk huge here? It's equities open when price action goes wild and a whole lot of things start happening. And you get spoofed into jumping into the trade when it's really not ready. This is saying we're bullish. I'm now not expecting price to close below this candle again, but I want to buy, and this wick is making me nervous. I don't feel comfortable buying here, putting a stop all the way down here. I think I could do better than that. So I waited and it traded lower and it presented a better trading opportunity down here. And then all that ran up. Now, in real time, you're looking at this price action and it looks choppy and disgusting. And, what are you going to do? You're looking at what price is telling you. It's telling us that we have two rejection blocks here holding price. If price is being held between rejection blocks, even if we don't know what they're doing from an algorithmic standpoint, that suggests that this is a holding pattern. Anytime a high and low is created and we're failing to close outside of that, that's a holding pattern. This is not very different. High, low, failing to close, holding pattern. If there are inefficiencies inside that range, right? So you could stretch as far back as overnight session and look at all of that. If there are inefficiencies inside here and price is in a holding pattern, usually opportunities form when price is either trying to fill those imbalances or we've filled them and now we're moving away from them. That's narrative. There's nothing in there that says precision, just narrative. It tells you where you don't want to see the price close or where you don't want to see a candle close, and then you have to look at whatever forms in real time and use that to make a decision. So just to, I guess, speak a little bit more on that. Let's say between these two lines, you saw that it was a rejection block and you're thinking about going long or short, right? If you're thinking about going short, you're looking inside here. You're waiting for the order block to get formed. It's not yet formed. So your mind is automatically saying, maybe it wants to pump a little bit higher to create the order block since this guy is not the order block. Make sense? If you want the order block to form above overnight session high, and this did not close above overnight session high, why would you think it's okay to see a big wick like this, then just sell it and hold on to it forever? It's madness. You leave that alone and you look at what price is saying. Not what I want to do, what price is saying. It's saying that I want to print another up candle higher than this one, but I need to build some liquidity first. I'm like, okay, cool. Do what you gotta do. Take some longs inside here. wait for that expansion. You're waiting for them to run and go higher. Now, that's one side of the story. The next side of the story would be, this is a down candle that fits the criteria for an order block. We know, realistically, you're not going to wait for that to be traded through, then a retracement to buy. But we know also that algorithmically, if that gets taken, it's perfectly fine for them to retrace and then push, because this would be objective, buy-side liquidity. If this here was not the objective and price pushed towards the actual objective and fails to get there, it means this is a failure swing. Objective, we push towards it, we fail to get there, that's a failure swing. Whenever a failure swing forms inside narrative or obvious logic, the very next thing you expect is the OLR. 4 stages: accumulation, failure swing, OLR, then your entry forms. So if after price fails here, you're thinking about the OLR, your first thought is, where is the opposing liquidity resting at this point in time? All right, let's start mechanically. At this point in time right here, when this candle closes, not when these get formed, when this failure swing is done and the algo starts looking back, where is the liquidity or sell side pool of orders waiting? Some lows before 835. It's not rocket science. This is when it starts to look back, it cannot see these. So you cannot frame these around anything. You're looking back, the OLR, one of these lows. Which one? I'm not going to say I always know, but it has to be something that was formed before here. In real time and whatever price action you're looking at, you'll be able to identify them with that logic. But hey, OLR is going to be done now. Not this very moment, but the new macro that's going to kick in is OLR. If this candle right here, right? Let's pause for a moment. Too far. And I'm going to take everything off just for the purpose of explaining this. Apologies for not sticking to the usual logic, but I just want to explain this. If at 835, we fail to get the objective, and you're now looking for price to create an OLR and a run, it automatically means you're expecting sell-side delivery. That does not mean there's going to be a trade. We don't need to get a trade. We just know that there's going to be some type of sell-side run. You're looking for a low before 835. I guess it wouldn't be far-fetched to automatically look at that low. It wouldn't be far-fetched. But because this here is inside overnight session, and overnight session houses liquidity, and in this particular case, overnight session liquidity has not been taken, and we have a rejection block that's holding up price. So many things are saying, look for longs. Identify the rejection block, like that. Identify the sell-side liquidity pool. A rejection block is not sell-side liquidity, obviously. Here's a low, housing liquidity, overnight session low. After this gets taken, you're interested in longs. 9-10. Wink, wink for the guys who are going to watch this and laugh. After 9-10, you're going to have some kind of change in the state of delivery to run for buy side. Why can you expect that out of everything else? This push down was an opposing liquidity run. The opposing liquidity was sell side. Once the objective is met, the state of delivery must change again. This time it's going to change to buy side. So what does a buy or bullish change in the state of delivery looks like? Down candles, highs being taken. I mean, that's just one example. This is the down candle here that swept liquidity. The rejection block is intact. I'm looking for an entry to form somewhere inside here. somewhere inside the body of this order block, I'm expecting my entry to form. Now the order block, the rejection block is here. Lots of relatively equal lows is here. Hindsight is saying beautiful stuff. The 1 minute chart is telling the story. And we'll look at that briefly. Then I'll try to answer some of the questions I got from Telegram. So looking for a change in the state of delivery. So something to be bullish. And FYI, a change in the state of delivery does not suggest an entry pattern. Ha ha ha. It just suggests that price is going to be bullish. No, the order flow is bullish. The narrative is bullish. The macro is running buy side. Whatever you want to call it, that's what happens when price takes this candle's high. That is not an entry pattern. That is confirmation that your direction is correct. After this gets traded through, let me take the magnet off. That point in time, there are two things that should be clear to you now. One, we're now bullish. Two, buy side is this high. Of course, you can always anticipate higher, but the first near-term drawn buy side is going to be that high. So now you could look at any bullish pattern, I think, should work after we trade above here. So if that's going to be buying 50% of the order block, perfectly fine. If that's going to be some type of breaker setups inside here, perfectly fine. If that's going to be retracing to an imbalance inside the order block, perfectly fine. If that's looking at relatively equal lows inside the order block, perfectly fine. Anything inside the order block is fine because an order block, or well, let me not say that. A bullish order block represents fair value for buying. This is the range where it's okay for them to buy. But what are they going to buy? Breeze? No. They're pairing liquidity inside. And that's why I get that run. So briefly, I'll drop to a 1 minute chart and try to frame out the long setup that actually did take place. Now let's pause for a moment and imagine this is your M5 order block and you had split screen. So you had M5 here and M1 here, and you're looking at through this lens. Once price starts to push here, you know this is the M5 order block being validated. You know liquidity is resting up here. It's easy to expect that to happen. I'm perfectly fine. I wanted to see that happen. There was something on the M5 that prevented this from pushing higher, but I'll talk about that in a couple seconds. I don't want to make this a long one, but let's take a look at this, right? If after the liquidity is taken, so after the OLR is taken down here, we're expecting a change in the state of delivery inside here after the liquidity. Even though you're waiting for M5 to confirm the change in the state of delivery from a different cycle or a different time frame, this here gets the ball rolling. This here is the first thing that gets the ball rolling. Are you willing to take a buy from here to target that high, then anticipate a retracement? If you are, then you have a trade idea. Like the bodies, but I'll keep it like that for simplicity. You have a trade idea right there. Now, there was something on an M5, I'm going to pop to it in a second, that suggested this bullish run could be short-lived if price traded up to the first bearish signature that we saw in real time, which was this candle at 850. So if you grab your gun box, spread it across the bodies, and they're like so, like that. And then you go back to M1, and you do that. This area on an M1 chart is the first area you expect resistance to come in the market. So listen to that carefully. This is where you expect resistance to come in. This is where you expect to be traded through to validate bullishness. If resistance shouldn't come in here and it should come in here, your trade idea moves to that. Because you're expecting a retracement inside the M5 order block, but you're expecting the resistance to come in here. Now, personally, I would have rather seen them trade through here, make life nice and easy, and then push. But that's what I want for my trade. But think about it. Wouldn't it be better if they failed to go higher again, started moving down fast? So persons start chasing, this as a bearish order block, for example, and then anticipating this low to be taken, even though that's a rejection block. That makes sense. That sounds like the more cruel thing to do to trap traders. So I closed my first entry here. The price came down, and I bought this again. Because this push down is the retracement that you want to, drum rolls please, this guy. That's what you're expecting. This is the M5 order block right here. It was validated. You're expecting a retracement. This came in at this point, 928. Again, wink, wink, sniper. At 928, you're looking for a run lower or a potential change in the state of delivery, right? Because of what happened here, you're expecting that, which means the run that you want on the buy side starts losing its potency. The venom is gone. If they don't give you big-bodied candles right here, once it validates this and trades back, and this is where you expect resistance to come in, if they don't give you big-bodied candles destroying this quote-unquote resistance area, then you have to submit. I submitted and I took mine and I left. The state of delivery is now changing again. This right here is where you're looking for price to draw to. Why there? Pretty much the same thing I just said. This is your order block. This is liquidity inside your order block. More specifically, liquidity inside your order block. So in a perfect world, we want to see something like this happening. And then astronomical run. That's what you want. First target, the high is from over here. Here to here. So between right here, when we came back down, and there, when you got to the objective, that's a trade idea. That's not a long time, right? Short period of time. More sniper jokes for that run here. That's all you want. Now, before I start looking at the answers or the questions that persons asked me to discuss today, I'm going to suggest that you study this delivery, then you study last Thursday's delivery. And that should sprinkle a little bit of curiosity at the very least. So HTF draw for NAS, DXY draw, if this then that for NAS. Okay. And then other profiles. So LTT from my Telegram group. Your question was, can you go over a few more of the profiles? This is one, and last Thursday is the same thing. I'll leave you to study that. HTF draw. Pop back to over here. I'm still looking at this order block here as the next area where more buying from an institutional standpoint should take place. So since we have lows inside, and they be so kind as to get me this, I like that. I'd like one of these daily lows, this one or this one, since they're both inside this candle's body. So lower prices. So that's my draw. Now from a if this then that standpoint, then this is for Osborne. Osborne is the one that asked this question. Here's our dealing range. So that high to that low. I think this one. There is no inefficiencies inside here. And since retracements seek only imbalances and internal liquidity, I am cautious of that. These daily highs that are all failure swings, I'm cautious of those. I'm cautious of them wanting to pop back up above here before going low. I'd rather them not do that. So, yeah. If that should happen, I'm not bullish. If that should happen, I'm looking for some kind of CSD here, and beautiful. But for right now, let's entertain the idea that this FVG needs to be filled. And this low here needs to get taken. So filling the FVG, taking this candle's low, looks like it's one and the same. So let's get that, get here, and we'll make our next decision here. Invalidation of this setup comes if there is any down candle or any day that's bearish and closes above June 22nd's high. You don't want that. So allow them to play here. This is not one big range. So look for lower prices. That's what I'm looking for. And I think that should wrap up. How do you know when it's time to step away? Okay, I like that. I'll end. I guess we'll end on that note. So somebody asked, how do you know when to step away? So let's say you were bullish here and price was doing this. How would you know when to step away? For me personally, every single day can be grouped into one of a million different profiles. Or what did ICD call them again? ICD call them something like classic buy day, classic sell day. I don't remember what ICD called them, but you remember that time when everybody wanted to see a classic buy day or London swing to New York, something like that. I don't remember them, honestly. But those were what we expected in the past. So, every day should look like them. Experience have shown me that those don't really happen that often. But overnight session profiles happen very often. I mentioned that the OB model is derived from overnight session profile 1. And that happens when in bullish, low prints the order block, CSD comes back, run. Or bearish, you flip that logic. So if I'm bullish and I see signatures that look like a profile 1, it doesn't matter what price is doing in here, I'm sticking to the narrative and managing the risk. If we're holding price inside overnight session longer than I think it should, just cut the risk. Follow your rules of engagement for entry and cut the risk. You'll feel less frustrated if price starts to not move when you manage the risk and you're framed out what you should see. When you move into understanding other profiles, not likely, but when you move into understanding other profiles, this is a profile here. This is an entire model built around rejection blocks. When you move into understanding this and you identify where the rejection blocks are, just watch how we trade at the rejection blocks. Which one is being destroyed? Which one is holding? The one at the low is holding. We're not closing below it. The one at the high, we're closing above it. So while expecting them to be in a holding pattern here is very normal and logical, they're destroying this rejection block. And this one is holding. Expect higher prices. There you go. So yeah, I think that's as much as I can remember persons wanting me to talk about. Anything else? Put your question in the Telegram tomorrow, and yeah, I'll try to get to them tomorrow in tomorrow's call. But yeah, hopefully that helps. Very nice profile. Overshot expectations. I wanted to get some shorts in here. I got 2 shorts on M1. I guess I'll show you that for completeness sake. I got 2 shorts on M1 when the level I anticipated was traded to. So on M1, watch that blue line. Doesn't look like much, does it? But I got this short at 52. That's 10 points. I got this short, 51. It's another 10 points. And I left. There you go. But yeah, another overnight session profile. Hopefully this helps. Mechanical engagement. We don't trade before 8 o'clock minimum. At 8 o'clock, we start analyzing. We start executing inside here. That should put a smile on somebody's face who's watching this. We start looking at your charts after 8 o'clock. Then inside here, we start looking at the delivery, checking the calendar, checking a higher time frame, and waiting for confirmation. You don't need to do anything before that. That reminds me, somebody asked me if I would trade London, what would I trade? I would grab 2 a.m. London time, 2 a.m. this time, I mean, and I would look at the 2 to 5 window like this. London kill zone. Yeah. And I will look at this and I will trade it. I will look at ranges that form in the beginning here, and I would treat it in the same way I treat overnight session. Allow the range to form, read the range. So while I will not point to specifics here, I'm just going to frame an idea based on what this looks like. Let's hypothetically say that that low to that high was the range I framed, right? Let's just say that it was. My trade plan would include something like waiting for that to close above, getting at CSD, and again, completely hindsight, I did not take this trade. Something like that, targeting that low. This is a form-fitted trade idea around a solid logic. That's what it is. Form-fitted around a solid logic. The logic is the algorithm must create a range, look back, find high, low equilibrium of the range, check if the range is efficient, and then run the liquidity. So I don't remember what your name was in Telegram, but that's how I would play London. Only 2 a.m. to 5 a.m. this logic. So back test, have fun. Please feel free to share whatever you found with me. And yeah, hopefully that helps. Thank you for coming out. Drop a like and subscribe. See you guys tomorrow.